Hey guys, Kunal here, Bulls on Wall Street. Guys, want to talk to you about a setup that we don't see very often, but is a highly profitable day trading technique, which is called the rubber band short. So today I applied this strategy into two trades I took, one in Mara and the other one in coin, for really some monster moves using some zero DTE options. So in today's video, what we're going to go over is what are the parameters of a rubber band short, why is this so effective, and then we'll review and dissect the trades that I took in them in the Bulls on Wall Street chat room. So first of all, what the heck is a rubber band short? A rubber band short is a parabolic short that you use to go counter trend on an overly extended stock. So I very rarely go counter trend. Everybody knows I am a trend trader, and I do believe that is where the most bang for the buck happens for all traders. But every blue moon, I will go counter trend when something shows so juicy, because you know, when you're trading with the trend and you're day trading, you can really get some nice gains and you're kind of trading with the wind at your back. But if you get something that turns into a rubber band short, you have a really epic opportunity for like an elongated kind of gain. Because stocks are just like any kind of rubber band, right? The further you snap it, right, the further you stretch it, the more violent the snapback is. And so what a rubber band short is that kind of parabolic short that you're going to use. And you don't got to do this on the small cap stocks, like your $2, $3 stocks and all that kind of stuff. The shelf life for those traders is really, really low. Yes, there are some great traders that do it, and they do usually pop up big percentage gains, but this setup is actually made for doing it on regular stocks. So what do we need to actually be successful in this stock? So first, let's go over what the parameters are. We are looking for something that's gone parabolic. I want to see like a 5-10 day run with like minimal rest in it, right? Because every day it starts to push, you're going to get more and more extended. So you want to see something like 1, 2, 3, 4, 5, 6, 7, 8 days, right? Like you want that thing to really, really push to trigger it in to that rubber band short. What we want to also be seeing is a handful of indicators that I use to confirm this. So when I trigger this short, I want to see the candles get completely outside the upper Bollinger Band. And I had it, I thought Mara was even a short up here, but it didn't show the setup just yet. You really want that kind of like exhaustion gap that kind of sets these things going, and that kind of final blowout that'll do it. Now, when that final blowout happens, like you don't have to short it that day, you'll have multiple days to kind of let it congeal and set up. And so what we're looking for is candle completely outside that upper Bollinger Band. I want to see a stochastics indicator of over 90. So what a stochastics indicator is it's a measure of overbought, oversold. The parameters that I use personally are 533, and you can use different settings, but essentially what that means is you're going to get your signals on 5-day basis. So we were looking for overbought stochastics. Anything over 80 is overbought, but 90 is a extreme level. You're looking for that kind of last gas push, get that stock out of the upper Bollinger Band, and now it's on watch, right? So like you don't have to necessarily short it that day when it triggers. I tried to get a short in this once on this particular day, but it just gave one little setup and it did not work, right? The damn thing trended all day. And that's why kind of going counter trend can be so difficult, because they can kind of keep going. And then, yesterday we had a little bit of a rest day, and I had a line in the sand kind of drawn out on this Mara. And so today when it gapped up, it ended up being this epic gift. And, the same setup applies to coin. I took a coin short in coin today. Similar setup, right? Like you just got from this kind of these last dips to the 9 EMA, right? A $60, $70 move. So it's up like 50, 60% the last month or so. That's your parabolic move, right? You got the stochastics over 90, right? Breaking out that upper Bollinger Band. Like this is a very, very high level setup. So let's talk about how we trade these bad boys. So that's the overall trigger, what it's got to look like, right? But now you got to look intraday to really, really nail these things down. So I took a short in Mara before I took a short in coin today. So Mara, because I thought it had more room to fall. Usually if you can fit two thumbs between where price is and 9 EMA is, you're going to have yourself a nice party. But the reason that I really like this one over coin at the open, even though coin is the trigger, right? Coin is the big leading stock of that sector. So I'm having both next to each other, right? But this one gapped up where coin had a flat open. And so I've got a level that's already drawn out here that I think is going to be really, really important. And normally I would wait for those levels in a pattern to congeal around there. But what you want to do, if you get a gap up like this, I mean, at that point, like, you want to be coming in hot. When you get a gap up like that and you can just, you get this extra room. So it was up about 5.5%, as it hit into this 29.50. Guys, that's your money maker. That's just a gift, right? So once it breaks under the VWAP, and I keep a dotted line on my TC2000 charts to indicate where the opening price is. So once it broke under the opening price, that's an opening range breakdown, right? And so I want to take the trade literally right there. I ended up getting 28.89. So it's maybe about 11 cents later than I wanted to. The damn thing moves fast, right? Now the margin stinks on this trade. The margin stinks on Mars. So what I want to do is take the 0 DTEs, right? And normally, like, it doesn't matter what day it is, we would just take the Friday strike. So I took the 29 puts. I thought that was, I don't want to mess around and try to time like, okay, it could go to 25. These puts will be cheaper. No, we're trading for speed, not comfort, right? And so just take the nearest strike price. On a Friday, you're going to get paid no matter what anyway. So as this thing is breaking down here, I mean, these puts are like, I had mine about 78 average. And now, like, as this starts to break down, right, like, you're going to start to get this thing really, really speed up here. And once it goes green to red, like, I mean, now you're really on for it. And, obviously I pikered this thing. Like, this thing ran up about 600% at one point. Look at this shit, right? I guess 78 cents this thing goes over here. So I like to scale out along the way, right? So, like, into this first flush, I'm taking some off into the next spot. In case it bounces at the green to red spot, I want to, like, cover up a little bit more. But what I'm also doing is looking to reload, right? So, like, I'm covering up into this because I'm already up like 20, 30%, right, on these, on these puts. But it's going to give me a secondary option. So when it goes green to red, I start loading up the 28 puts too. So now I got a quarter of the 29. But when it goes green to red, I can hit the 28 puts. I put a stop over the 9 EMA. Guys, you have such minimal risk here, right? So as it goes green to red, your stop just goes right over the 9 EMA. You've got 30, 40 cents risk, right? So now you can take the 28 puts, and also now you're kind of double dipping on this thing, right? And now you're really, oh man, right? Now you're really hitting this thing in a good manner, right? So like these things go, I mean, look at this, 30 cents to $5. So I'm adding them over here. So I'm not getting them at the top, obviously. It's already speeding up here. But that's okay, right? That's okay. That's what we want to do. I just like to hit the nearest strike price. Obviously, if I thought about it a little bit more, it would have been probably smarter to get something a little bit down here in terms of the strike, because you could see some of the farther strikes made 1,600%, 1,800%. But that's such a pipe dream. People do that because they're like always thinking lottos and YOLOs. I didn't know this was going to be like such a massive trade, right? Like, I ended up covering off, by the time I was in the 26s, I ended up covering out of most of this stuff. And so, in the end, like, I pikered these a little bit, my last covers, but still made like some good cheese on this thing. What I could have done better, because I ended up as around 26 that I ended up covering up those lottos. And so obviously I left quite a few bucks on the table. So what are some things that you can do a little bit better, right? Well, first of all, I have my EMAs here. Like if I'm going to have two ads, so I'm also scaling in and out of this thing, well, I've got a double position here. I can afford to use a trailing stop and use this 9 EMA and try to at least like ride it down the 9 EMA. If you're uncomfortable being that loose with it, you know, what you can do is go to a 2-minute chart, right, and then ride it down the 9 EMA like that. You'll still, if it's a deep enough trend, that 9 EMA should hold right there and get you that cheese. So the opportunity was there. I give myself a B plus on the trade because the entry, the idea, the patience was perfect. The ads were perfect, but the scaling out, as always, needs work. I'm Piker for life, baby. Piker is like, you know, some of you guys got dragon tattoos or skulls or whatever. I'm Piker tattoo all the way. Now, the good thing is, right, I got the double dip on this thing. What I mean by double dip on this thing is, you know, as old Mara's starting to bust, I already had in the pre-market, right, a level drawn out on coin. So coin started, it bounced into the close yesterday at this 184. That happens also be the previous day's VWAP. Guys, remember that. Previous day's VWAPs and old bounce spots. And so you have an easy, happy-go-lucky line in the sand here. So coin, the tell today was like, see how it went fake red to green? It opened up and went red to green and got sold off right away. Tried it again. Suck in some last buyers. And so when it can't take out this high, like you already kind of know it's done. But I want to make sure I got a good entry, right? Because I already got a lot of risk on the table. Not a lot of risk, but I already have risk on the table on Mara, right? And so I want to make sure that I'm getting a good entry on this. So as this thing pops down and then you kind of pop into the EMAs, right? Then boom, like you take this thing out. You know, I'm loading back into this thing, 184.18. And so like we're a little bit before the breakdown. And I did the 182. I think it was the 182 puts on this thing. So like as this thing is busting lower, dude, this is the awesome part about, right, options. Like as this thing is busting over, dude, and I thought that actually Mara would move into bigger percentage things. I mean, these things went from fucking $1 to $11. Now I, as Piker for life, was out of this thing by, I believe, 178. So, you know, it ended up being, I ended up getting some good quesos on this thing. But I left about a double on it. I believe my last scale out on this thing was 181. Yeah, 179.60s. Fuck, right? So I pikered this one big time. I give myself a C plus on this one. Idea great, execution great, thought process great. Got to work on the sells. You know, part of it, I just started, you know, we have an options trading service that's run by Levi. I mean, he's the best trader I know. So I just started trading some of this stuff. And the speed of which it moves has always surprised me. So I think I've been pikering a little bit more than normal. But, you know, in hindsight, I'm going back as I review my trades. You know, when it broke this previous day's wick too, and you have this, I could have done a better job drawing out my levels in the pre-market. When it, you know, my thinking was it might have a little bit of a bounce, like right at this spot. And then, you know, I was going to try to take it back into the EMAs. And so, like, I was trying to cover into this flush, but I should have still kept a little bit. Because in Mara, you know, I scaled out, like, into the 1/16ths. But for some reason in this one, I did just 1/4. And so that's a little bit perplexing and something I have to kind of rejigger my thought process on. And obviously, like, this is, dude, guys, that's 10 grand into 100 if you do it right? And of course, nobody buys the low and sells the top. But what we want to do is, like, always kind of try to extract as much as we can. My belief is if you can take 50% of the gain in terms of what you could have got, you're being pretty efficient, 40 to 50. I think that's a pretty efficient level. But, man, I had the home run on here. Still did really good. You know, these things got up. I think mine were in the 4s and 5s. But still, like, fuck. I was so close, right? I was so close to that trade that you dream of, right? So, but I think a couple things, like we just looked at, I can take this 2-minute chart and do a better job riding down those EMAs. That would have been, that would have been really something. So we're on to something here. This is a good setup. I believe the market in 2024 is going to offer some more shorting opportunities. Remember the setup on this. Overbought stochastics, candle outside the upper Bollinger Band, You want that kind of like 7 to 10 day run, and you want a little bit of a speed up towards the end, a little bit of mania, when everybody's trading it, when it's chopping the shorts up. That's like the good spot to start watching. Look for changes in the price action today, right? The fake red to green was a change in the price action that gave us a clue. So, guys, let me know if you have any questions. Take care. Love you guys. Smash that like button. Let your friends know about the brown Brad Pitt and what he's up to at Bulls on Wall Street. I'm just teasing you. And, guys, we have a free trial to our options room. You guys are more than welcome to join us. I'll post a link in here, and we'll have some fun. Take care.